All right. So it is 4:05, and I said we'll be starting at this time. So good evening, everyone. I hope you can all hear me. Can someone just indicate that he or she can hear me, and if you can see me?
Okay.
Yes, we can. We can see you.
Okay.
Go ahead.
All right.
Yes.
All right. Thank you. So good evening, everyone, and welcome to this special webinar on building a strong financial foundation, proudly hosted by Quantum Zenith in celebration of the Global Money Week. My name is Chimamaka Anaponwoso, and I am honored to be your host and moderator for today's discussion. Now, why are we here today? Many of you might not know, but the Global Money Week is an annual campaign that promotes financial education and empowers individuals, young and old, to make informed financial decisions, right? And at Quantum Zenith, we are deeply committed to this mission, ensuring that individuals and businesses have the right financial knowledge and the tools to secure their future. Now, before we go down to today's discussion, I'd like to give you a brief summary of what Quantum Zenith does and who we are and what we do. Now, Quantum Zenith is a leading financial services group comprising 4 specialized entities, each dedicated to different aspects of financial growth and wealth management. We have the Quantum Zenith Asset Management and Investments Limited, where we help individuals and institutions grow their wealth through innovative investment solutions, including our mutual funds and discretionary portfolios. We have the Quantum Zenith Capital and Investments Limited, where we provide expert financial advisory services, including mergers and acquisitions, debt capital markets, and capital raising solutions to support businesses in making strategic financial decisions. We have the Quantum Zenith Securities and Investments Limited, where we deliver professional securities trading services, including stock and bond trading, direct market access, dividend recovery, and tailored portfolio management solutions. And the last entity, not the least, we have the Quantum Zenith Trustees and Investment Limited, where we assist individuals, corporations, families, and governments with debt solutions, wealth transfer and protection, estate planning, and charitable giving strategies to secure financial legacies. So now that is who we are at Quantum Zenith and what we do. So you can download our mobile app named Quantum Zenith on Play Store and Apple Store, and then you can sign up. Now for the discussion of today, I'm going to go ahead to introduce our panelists. Today we have a distinguished panel of experts who will share insights on key principles of financial success. So we're going to take a moment to welcome them, right? Now, just to reiterate again, if anyone, can someone indicate if you can hear me so that everyone's carried along and you can see me? Okay, great. Now, so the first panelist for today is Mario Quere. Mario Quere is a finance strategy and innovation expert with over 16 years of international experience. She's an executive director at Quantum Zenith Capital and Investments Limited and serves on the board of 3 other Quantum Zenith entities. The second panelist is Mr. Kennedy Ichibo, who is the managing director, CEO of Quantum Zenith Capital and Investments Limited. He is a seasoned commercial and investment banking professional with over 22 years of experience in the financial sector. And then we have Mr. Olaniyi Olakuri, who is a chartered stockbroker with over 17 years of experience in the investment industry. He's currently with Quantum Zenith Securities as the chief dealer stroke head of equities sales desk. So please, our panelists would like that you turn on your cameras before we dive into today's conversation. Please, if you're not saying anything, please kindly mute your mic so that we don't disrupt the flow of the. Okay, can you hear me? I'm so sorry. Can you hear me now?
Yes, we can. Go ahead.
All right. So that's great. So we will be diving into today's conversation. I know that a lot of people have been waiting for this. This is the aspect that we've all been waiting for because, I mean, we're all eager to learn, right? So the first question of today, we want to lay the foundation, right? And this question is directed to Mr. Kennedy Ichibo. I'd like for you to tell us what are the key principles of building a strong financial foundation?
Okay, Chimamaka, thank you. Can you hear me?
Yes, we can hear you, sir.
Okay, I want to quickly welcome our audience. I think we are honored to have you join us and taking time out of your busy schedules, and we'll try to make sure we make it worth your while. So when we talk about strong financial foundation, it goes back to first of all having an earnings base. So for you to build a financial foundation, you definitely need to have an earnings base. And to just bring it home, the whole essence of us all getting educated, at least from this part of the world, learning some skills and developing competence is just to generally increase our earnings ability, our ability to sell our service, and in return, earn some form of compensation. So it begins by you having an earnings base. Your earnings base can be from either your salary or it can be from income that you earn on investments. And for those of us who have businesses, it can be from income that you earn on your business. So once you have an earnings base, then you begin to build on it in strengthening your financial foundation. And on the earning base, I think the first point that goes on top of your earnings base is for you to develop a savings culture. So I think typically what we are used to is to say that you have to pay yourself. So in interpreting that savings culture, we typically say as a rule, when you manage personal finance or even institutional finance, there is a very strong need for you to pay yourself. So paying yourself means that there's something that you need to set aside from your earnings. And of course, we know there's several reasons why it is important that we set aside monies from our earnings. But because of the education that is going on, and part of it, which Quantum Zenith plays a key role, it is not just enough for you to set aside money for savings. So what we have seen historically is people just set aside money, you leave money either in your current account, you leave money in your savings account, and people before now, at least now, the level of education, financial education is increasing. People just leave money there. Those monies are either idle or they are earning little to nothing. And on the expense side, your expenses are just growing. They are just, growing geometrically. So it is not enough to set aside money and say you have savings. What people like institutions like Quantum are teaching out there is for you to now deliberately invest those savings. So once you come from earnings, you go to savings. From savings, we're saying you need to take it a notch higher to active investments. And of course, we have a lot of investment outlets, which in the course of this discussion, we're going to look at. So we look at investing is the third level of the brick that you use to build a strong financial foundation. Investing will entail considerations like what are your objectives? If you are doing investing, you have to have an objective. Do you want to pay your children's school fees, maybe their university fees in another 10 years? What is your current age, your demographics? What is your current age? What is your current circumstances? So all those different factors play a role in deciding how your investment portfolio is going to be layered. So on top of investment, we also, in building strong financial foundation, you need to also look at your spending patterns. How do you spend? Do you spend based on a budget, or once the earnings come, your salary comes, you just begin to, just start doing those transfers, just start putting the cards in every ATM, you are in ShopRite, you just enter, they just buy? You have an Excel sheet. If you don't have a laptop, do you have that book, that paper where you write? I still keep Excel sheets, as Chimamaka said. I've worked for up to like 22 years. In all my years, as I speak to you this moment, I have Excel sheet on my laptop where I have a budget. I have things that they are just standard expenditures, and I kind of have an idea of what my savings are from my side. What are the extras beyond my normal pay myself savings, and what I can do, you know. So you budget for that, and you also look at how do you do the spending. I have do you spend on wants versus do you spend on needs? So we need to limit, you know, the extent to which we spend just for wants. Needs and wants are different, you know. So I think a little more of our spending should be centered around our needs and less on our wants. And then there's a major teaching I always try to give when I have opportunities like this. It's called spending matching. How do you match your spending? Do you use your monthly salary to spend on capital projects? Or if you work in a bank and other institutions where you have like lump sum payments, do you use that to match, you know, major lump sum expenses like your rent? So the principle of matching is also a very important pattern of spending. And finally, our attitude towards borrowing is something that also, you know, influences our ability to build a strong financial foundation. What do you borrow for? Do you borrow to use money for something that does not generate income? Do you borrow at levels that your monthly salary cannot manage? And you see some of us, because of our poor attitude towards borrowing, we cannot pay. They call you, you are hiding. You go to church, you give prayer point that you want your debt to be cleared. You know, so these are major areas that we need to focus on in building a very strong financial foundation. Thank you, Chimamaka.
All right. Thank you so much. Thank you so much. I mean, that was really, really detailed. I mean, key points that I took from this: earnings base, it has to start from your earnings, then you go to savings, and then you go to investment. But keyword on active investment, not passive, active. So you have to be very intentional about investing your funds. Then you also have to pay yourself whatever you earn and also spending matching, right? So thank you so much for that detailed explanation. We'll be going to the second question of today, and this question is directed to Mary Okwere. In line with the theme of the Global Money Week, which says think before you follow, wise money tomorrow. Why do you think financial literacy is essential, and how can individuals improve their money knowledge? Thank you.
Thank you, Chimamaka. That's a very wonderful question. So before speaking about why financial literacy is important, let us talk about what financial literacy actually is. So financial literacy is your ability to understand, manage, and make informed decisions about your financials, about your personal finances. Kennedy has he's touched on the important aspects of financial literacy, that is budgeting, investing, saving, and debt management. Why is financial literacy important? The first point is it is important for you to be financially literate so you can make better financial decisions. You know, if you don't have information about, for example, an investment, you're going to make a bad investment decision, right? If you don't have an understanding on how to budget, what's going to happen? You might probably spend more than you earn. So for you to be able to make wise financial decisions, you need to be financially literate. Another reason why financial literacy is important is for you to be able to manage your stress, and it will improve your economic well-being. The times when I'm most stressed is when I don't, or when I have a financial commitment and I'm thinking of where I'm going to get the money from. So that could actually lead to stress for any person. You know, so financial literacy is important to reduce your stress and to help you avoid debt traps, right? You can imagine making a financial decision about borrowing money while not understanding that. You see that 30% that the small lending company is giving to you. It's not 30% per annum, it's 30% per month. And some people don't think about it. They just go straight on and then they agree to take the loan, and then every month, like, you don't stop paying forever. There's somebody that I know that actually took a loan of 50,000 naira. 50,000 naira. And in less than 2 years, they told the person that he was owing 2 million naira. How did he get there? He did not understand the terms and conditions of that loan. So if a person is financially illiterate, you can find yourself in those kind of situations. And lastly, one of the importance of financial literacy is it would help you make long-term wealth creation decisions, right? Kennedy talked about saving and investing. I'll give you a practical example. You see, on my Excel sheet, right, I did this future value of an annuity. So that means annuity is when you make a periodic payment, right? So if you start today and you invest 50,000 naira every single month for the next 30 years at 15% interest rate per annum. At the end of 30 years, you'd have 346 million naira. So a person, because the rates keep fluctuating. I know right now a 365 days treasury bill will be 19%. So I was a bit conservative of my calculation. So if you start saving and investing today for 30 years and you're consistent, in 30 years time, you'd have 346 million naira on retirement, assuming that everybody here, the average age of a person here is 30 years old or 35, right? So at 65 at retirement, you have cool cash that you can use to sustain yourself, and then maybe discounting for the present value of that amount in 30 years. But yeah, but at least that's a substantial amount that you would have saved outside of your pension, right? So it is financial literacy. I don't know if any one of us have fallen into like all these maybe mistakenly invested in an MMM or what they call a Ponzi scheme, or maybe we've fallen victim of frauds, right? I don't know if anyone here, maybe signify by raising up your hand. I don't know if I'll see the number of participants. A lot of us have been victims of those. Nobody here? Chimamaka, not even you? Or maybe Bitcoin?
My hands are raised already.
Okay, all right. So I'll just talk about one Ponzi scheme. I'll talk about NotPetco. NotPetco, everything went bust in 2007. Okay, I can see two hands. Okay, a couple of hands. Okay, so it went bust in 2007. Some people hadn't started working by then, and they were offering 8.8% interest rate per month, which would give you 108% interest rate per annum, and at some point you sit back and like, what's the inflation rate? What's the MPR? That's what a financially literate person would do. But if you don't have that information, somebody's going to bring you a deal that is too good to be true. Those are great deals. A lot of people have fallen victim of those. So financial literacy, financial education is very important. You can have a bachelor's degree in accounting. You can have a PhD in finance and still make those uninformed decisions. Why? Because we are not doing research. The second portion of the question is, how can an individual improve their money knowledge? I would say research. Do your personal research. The theme of this Global Money Week is think before you follow. Right now, there are so many people on social media that have something nice to say. Everybody's an influencer. Everyone's a thought leader. Even somebody who doesn't have an education is telling you how to invest and how they got this money, but we don't know the full story. So we need to be very careful. Do your own personal research, listen to reliable sources, and some people learn from experience, right? By the time you lose money, Chimamaka, by the time you lose money one time or two times, you probably won't make that mistake again. But financial literacy it's a journey. Right? You might think now you know everything, but it's a journey that does not end. You need to keep educating yourself, and you need to keep planning, right? You need to save, you need to budget. Kennedy talked about his Excel sheets. No, it's not just an Excel sheet that you would not follow. It's something that you need to keep track on to, secure a good future for yourself and to relieve yourself of whatever financial stress that you may actually, financial stress that may happen in the future. So thank you. I hope I answered that question, right, Chima?
Yes, you did. You did very well. Thank you so much for that detailed description, Marie. Key points: do your personal research, think before you follow. Keep educating yourself. So we'll go to the next question, right? And this question is directed to Alani Olakuri. So how can beginners start investing without feeling overwhelmed, right? Practical tips, right, on how people who do not even have this access, and even people who have even started the journey without feeling overwhelmed. Thank you.
All right, thank you very much, Mamaka. It's confirmed you can hear me. Can you hear me?
Yes, I can hear you. Please go ahead.
All right, all right. Thank you very much. Okay, so I'll start by saying one of the first things I learned when I started my investment journey is doing a profile on investors, right? So as an investor, you are the one that know the kind of risks you are willing to take. And so the first step is, are you a risk averse person? Are you somebody who likes taking risks? Or would you rather just put your money somewhere and you just watch it grow? And so for me, that's the first step. If you come to meet me and like, listen, this is I plan to start investing. That's the first question I'm going to ask you. What's your risk tolerance like? Do you like risk? Do you do? Well, of course, would tell you the kind of products you can buy. And then if you don't like risk and you just want to watch your money grow, then you will tell the product you can invest in. So the first thing as a new person in this industry, embarking on this investment journey is you need to understand the investment options. Like Maria had said earlier, financial literacy is key. You need to know why you are investing. A lot of people have actually lost money because they hear this person come and say, look, I gave them 100K and they gave me 10 million, and you just jump and they follow through. And then at the end of the day, you end up burning your fingers. So you need to understand the investment options. What are the investment products that are available? If I buy stocks, for example, what are the risks? What are the returns? What are the plus? What's the advantages rather? What are disadvantages? And likewise, fixed income products. Now, when you now know the risk, you can now say, okay, I like risk. You can play in the stock market. In stock market, you can make money, but you can also lose money. The loss is limitless. Meanwhile, even the gains is limitless. And if you decide to go to fixed income, yes, your 90% of the time your capital is assured, but you know what you are going to make. Oh, I'm going to make 20%, I'm going to make 10%, and all of that. So after you decided on which one you want to do, you can find a balance. You can have a portfolio whereby you have a bit of both. Yeah, so that when one's not doing too well, one can do well, one is doing well and can, you can average out. Then ask yourself, why am I investing? Everything you do in this life, there should be a goal towards it. You have to be deliberate. Am I investing for dividends so I can have a steady flow of income coming at a particular time, passive income? Am I investing because I want to buy a house? Am I investing because I want to buy a car? Am I investing like Kennedy has said earlier towards your children's school fees and all of that? So you have to know why you are investing, and then you need to have financial goals. This is what I plan to do in the next 10 years. Okay, I'm trying to raise 10 million in the next 2 years. Okay, so how do I plan? How do I save towards, attaining my goal in the next 2 years? And then so the most important part now is you don't necessarily, one question I've always gotten is people say, I come and buy stocks. Hey, yeah, how much should I bring? Should I bring 2 million? Should I bring 10 million? No, you can actually start small. You can start with 50,000, you can start with 100,000. You can wake up and say, okay, you know what? I have 100K. Why don't I put 30K in shares every month and put 70K in mutual funds if you are a very risk averse person? Or you can plug into our equity fund that tracks both, our equity. Or you can just say, okay, I want to do more of equities. Hello?
Yes,
Oh,
we can
okay.
hear you.
Yeah, I want to do more of equities, and then you now put more in equities, you put more in mutual funds. Hello? Oh, okay. Like I was saying, you can actually start small. You don't have to start large. You can start small. You can save up. You can save up. 50K every month. At the end of the year, give or take, you save 600,000. It might look big from the beginning, but you put that away from your salary, from your Friday money. Today's Friday, people are going to go out. Why don't you just put that money aside and invest it, and then you gradually build a portfolio. And then investment strategy. Um, like I said earlier, you know your risk tolerance. If, for example, you put aside 500K to invest every month, you can decide and say, look, I want to put 200K in equities. I want to put 300K in mutual funds, depending on how the market is. Sometimes when the equity market is favorable, you can reverse it. By the time you do this a couple of months, a couple of years, you get the hang of it, and then you know how to just balance out, your points. For those of us that play PlayStation and like football, sometimes your team has to defend, sometimes your team needs to attack. Likewise, the same thing happens when you're investing. You need to know how to balance your funds and balance your portfolio. So I advise people to do 70-30. If you are a very risk-averse person, just do 30% in stocks. I mean, 70% in mutual fund, bonds, and the like. Pick 3 or 4 particular stocks. You don't have to buy all the stock in the market. You can pick 3 or 4 very good fundamentally sound stocks. I mean, Zenith Bank, obviously, GTB, Dangote Cement, and MTN, and you just build a portfolio. I mean, there are going to be periods prices will go high. There are periods prices will go low. When the price goes low, of course, you average down your cost. When the price is high, hey, you can wait it out and all of them. You can wait out all of that, or you can actually sell and even just take out your profits. So at the end of the day, though, like Maria said earlier, you need to educate yourself. You need to know what you're investing. I liken investment to you buying land. If you buy land and you don't go and watch it, and you leave land and you think you come back there in 5 years' time and need your land, you're on a very long term. You know, you will always go there almost every month to go and check your land. So likewise, when it comes to investments, you can do the same as well. That'll be all from me. Thank you
All
very
right.
much.
Thank you. Thank you so much.
Chimamaka.
Yes, thank you. Thank you so much, Nee. Thank you so much for that detailed explanation. And so the key word for me is start small. You don't have to start big, start small. So the next question is to Mary. How do you balance saving, investing, and also enjoying your income responsibly?
Thank you, Chimamaka. I would say we need to prioritize. As much as it's wonderful to save, to invest, to budget, God forbid you have a medical emergency, you're going to have to pay for that. So the key thing is you need to prioritize what is important to you. And the last part of the question is, how can you enjoy your income responsibly? You can enjoy your income responsibly while still saving, while still planning, while still investing. For me, what I do is I know there's this 50-30-20 rule where you spend 50%, you spend 50% on necessities and whatever, but then you save 20%. I don't quite remember what the 30% is. But for me, I spend what I do not save. The first thing I do every month is to take a portion of my salary and say, this is what I'm saving. And I cut my cloth according to what is left, So that's a way that I'm able to enjoy myself. But at the end of the day, I prioritize. I have 5 million somewhere. I need to pay for something, or you need to pay your children's school fees, right? You can't say because you are saving because you want to get 100 million in 20 years or something, and you do not pay your children's school fees. So the key thing is for you to prioritize and spend what you do not save. Thirdly, I would say that do not live a salary lifestyle. I actually listened to somebody who had been through financial hardships, and he made okay, thank you. Martha just gave me the information that I needed. He went through financial hardship because he lived a salary lifestyle. What does living a salary lifestyle mean? You earn 2 million naira, but then, 2 million naira is coming in this month of March. You've already purchased the purse for 1.5 million, right? And then you have 500,000. Then next thing, in April, you already plan a trip. That one is like 1.8 million. And then in May, right, you want to buy a shoe. The shoe is worth 2 million. So you have nothing left. So you're just living day to day based on your salary. Do not live a salary lifestyle. Spend what you do not save, and then prioritize what is important to you at that particular time, right? So there are certain times where you have made a capital expenditure. You've purchased your house, right? You've paid up your debt. So what is important? You want to spend your money. You want to travel. You want to do fun things, but then you still have to save for the rainy day. So just learn to prioritize. And once you accomplish some of your key goals, like if you want to start a side hustle, you want to have short-let apartments, you want to rent houses. So once you've accomplished all those goals, you would then have the opportunity to enjoy what you have left. So prioritize, do what's important, and then save to accomplish your key goals that would help you even earn more financially. Right? You can imagine if you have, for example, 200 million investment, you invest in a commercial paper, you get the upfront, you have that 200 million sitting somewhere, and then the upfront interest is like 20 million that you didn't give to them, and you have that money to spend. So those are wise ways in which you can actually enjoy your money. There is no fun in spending your last card at every point in time and being desperate for the next inflow. And then I also want to add the 6 months, 3 to 6 months emergency funds. I saw somewhere, and it's something I also do, is that you make sure you want to have 3 to 6 months of your expenditure saved somewhere. I would do 3 to 6 months of my monthly salary because maybe that's the lifestyle I'm accustomed to, saved somewhere. So just in case something happens, I'm unable to work, I still will be able to survive for 3 to 6 months. In America, right, you are probably one paycheck away from homelessness because you pay your rent monthly, you pay your water, you pay for everything. Everything is so expensive, and compared to how much you earn in a month and how much you spend, there's usually wiggle room to save. So you need to gather that 6 months emergency fund so you're not one paycheck away from homelessness. Thank you.
All right. Thank you so much. Thank you so much, Marie, for that. Just key takeaways. Spend what you do not save. Do not live a salary lifestyle. Prioritize, learn to prioritize at all times. And also have your 3 to 6 months emergency fund saved up. Okay, so the next question will be going to Kennedy. And the question is, what are some investment products or solutions available for individuals looking to grow their wealth? Can you walk us through a few options and how they work?
Okay, Chimamaka, thank you so much. So I will build them into 3 buckets. We'll have equities, we'll have fixed income, then we'll have money market. So as we said, I think myself, Maria, and Nii, across some of our responses, there's something that is common. You need to have certain things cleared in deciding which product you are going to invest your money. Even when we sell in Quantum, we don't just say go and put your money here because we want to make profit. We do some evaluation, we profile you, and taking some of the inputs or data that we generate, we now advise you on options. So, for example, when you talk of equities, the risk is a bit high, and a good way to explain it is if you compare the price of some of the banking stocks, let's say like 2 weeks ago and what it is now, you will notice that it has come down. And that shows you that the element of risk in equity investment is a bit high. So if you want to do equities, typically we encourage individuals that have high risk tolerance, but not just tolerance in isolation, but tolerance that is driven by your horizon. For example, if we have young people, our Gen Z colleagues and friends and investors, we believe that you have a lot of years ahead of you, and those long years ahead of you can allow you invest in some instruments that are subject to fluctuation. But the idea is that because you are going to be investing for a long time, then you are able to cope with that risk. And it has turned out that for people who have long-term appetite, if you have a long time, you don't want to be looking at the stock market prices every day. Your purpose is you want to just be putting something aside over a long time period, then we recommend that you should look at stocks. And I will give an example. Over the last 10 years, I used to see a lady that comes to our stockbroking firm. And when I say a lady, this lady then used to come like practically every day. And at some point, I had to ask my colleague who she comes to meet, who was in the customer service, that why does this lady come every day? And his explanation really shocked me. And he said, for every day the lady comes, that what she does is that any money she gets, extra money, 20,000, 30,000, and she will go and pay it into the bank account of Zenith Securities, and now follow up with them to say, okay, she will not bring a list manually. She will come and say, buy, this stock, buy this unit of this stock, buy this unit of that stock. And this lady was consistent. When I say consistent, this money she was putting were not 1 million. I tell you, it was not 500,000. Small money. Over the last 12 years, she started in 2013. I went to meet my colleague today. I said, there's this lady, that lady. And I explained, I said, what is the value of our portfolio today? And even in short, let me be very practical. He said maybe our portfolio is like maybe 2-3 million, because I was standing. That is him using head knowledge to say, after all, probably this woman is putting 20,000, 10,000. So maybe it will be like 2 million. Guys, when he opened that portfolio, that woman's portfolio was worth 16 million naira. Yes, 16 million naira. That is what long-term equity investing does, because she has kept it and she's still investing till now. So once you have a long-time horizon, we try to encourage that, and you have a certain amount in your investment you want to be keeping aside, then equity market is very good. Now, if you also have a long-term horizon and you have a targeted expense that you want to do, in another 5 years, I'm going to be in the university, or I have an annual obligation, over the next 5 years. Mary mentioned annuity. If you have a fixed obligation, for example, there's this 1 million I need to be paying maybe every 6 months, or maybe let me say 10,000 naira. I want to pay it over the next 5 years. Then you can match it with a bond investment, because typically bond investments are long-term investments, averaging tenor of 5-7 in Nigeria. With infra credit, we now have 10-15 years and tenors that are basically for infrastructure. So you can invest in a bond and they pay their interest semi-annually. So once you have any form of obligation that is like semi-annual, that is fixed, that like an annuity type, then you could look at investing in a bond so that you get your interest, every 6 months, and you can use it to take care of those, timed expenses. Then, but for the money market is essentially short term, within a year. And that is where a lot of us fall in, because you always have expenses that you want to take care of. And in money market, we have mutual funds. We have different type of mutual funds. For Quantum Zenith, we have about 4. The major flagship is our money market fund. We have our balance strategy fund. Now we are also in the process of establishing and introducing our dollar mutual fund. So for mutual fund, the advantage is that it is short term. Typically, the lockup period is about 30 days. That is the best way to save, especially for emergency. So that emergency fund that Marie mentioned, for those of us who are interested, I always tell people, when I sell our money market fund to people, I tell them the major advantage that this money market fund has is the flexibility and the fluidity in terms of access to funds. Today, the standard, even the regulatory standard, is that, I'm not teaching to redeem, but I'm just saying that place you put money, that the money is working for you without you bothering your head. At the same time, if you have a need, you want to save for a short-term purpose, then where is that place that you won't have any challenges at all accessing the money? Then typically you are a money market fund person. If you have ethical considerations, be it you are the type that you have very strong preference for some ethical, faith-based and climate-related matters. We also have, a fund that is environmentally friendly. So you could look at that. So we have mutual funds, and mutual funds essentially are for people that, most of us here have our daily work. We are bankers, we are lawyers, we do our work. We don't have time to start analyzing investments. So what mutual fund is supposed to do, and we have our equity fund. If you don't have the time to start analyzing Zenith Bank stock or any other stock, then you can invest in our equity fund. And that equity fund, we will help you take that responsibility, because we are experts. So they will be the one taking decisions around investing in equities. So the mutual fund is good. The minimum amount is very small. It is targeted at individuals, not even institutions. So for many of us on the call, I'm sure a lot of us are customers already, which means you're already in the right direction. The mutual funds, it's something that we can take advantage of. Then in terms of the trust, yes, Africans don't like talking about it. If you ask a lot of us, especially those of us who are married, do you have a will? By the time people raise their hand, you will probably see that the number is not that much. When you talk about will, they talk about, by the grace of God, nothing will happen to you. But this is part of the financial education that Marie was talking about. So again, for the trust business, it's important. I won't just talk about where you're putting money. It's also important you start planning for the future. So you can look at products around trust where you even if you don't want to do a will, if you want to get, an independent entity to manage your estate, for whatsoever objective that you have, then the trust business is something that we can also begin to look at. Thank you.
All right. Thank you so much, Teddy, for that detailed explanation. So I believe that we then have like basic knowledge on where we can invest our funds if you have not started. And then if you have also started, you now have knowledge on what you can do to diversify your portfolio. Thank you so much, Kennedy. The next question goes to, so please, before the next question, yes, for those who have questions, we will get to you, right? We'll ask questions very soon. The next question is to Alani. If someone is struggling financially, what's the first step they should take today to turn things around?
All right, thank you very much. Unfortunately, nobody likes to be in debt, but it happens. It happens, life happens. Sometimes bad decisions happen, bad investments happen. But nobody wishes to, at any point in time, to be in that situation. So the first thing to do is take stock of your finance. Like my colleagues had mentioned, Excel sheets. If you don't have an Excel sheet, take a piece of paper and sit down and write it. How much do I earn? How much am I spending? You track all your expenses. Yes, we all love to watch football. You are paying for DSTV. If you can't afford to pay for the biggest bouquet, pay for something cheaper. It's Friday. We all know how Lagos is now. By the time you even step out, 20,000 naira has gone out of your wallet. Before you even order, you spent 100,000, and then on Monday you're looking at receipts and you're like, did I spend this 100K? These are some of the expenses that come unannounced. And then you just realize that you're living from check to check, hand to mouth and all of that. So you need to list out all your debts, right? That's the first step. And then start looking for ways to eliminate some of it. Yes, you want to go out on Friday. You can go out once on Friday in a month. You don't need to go out four times in a month every Friday to spend money. Those are some of the decisions you have to take, no matter how difficult it is. And then the second step is you create a budget. Now, budgets are very, very interesting. Before I started my career, anyway, I didn't really believe in budgets. Whatever comes, you spend it. But the more you realize that you need to have a budget, the more you grow up, you need to realize you have a budget. This is what I earn. What do I need to, set aside for XYZ? There's something called needs versus wants. Your needs, of course, you need to pay rent. You need to pay NEPA bill. Of course, NEPA will cut your light if you don't pay NEPA bill. You need to buy data with the way things are now, work from home. Everybody has a phone. So there are some things you need. And there are some wants. Okay, yes, you want to buy the expensive bag, like Marie said. You can save towards it. But you can't leave that hand to mouth, without you keeping money from what you earn aside every month. So you also need to set a realistic way of living. You cannot live beyond your means. There's this rule of thumb that says if your rent is more than 3 months' salary, you are living a bit above your means. So these are decisions you need to take. You need to budget. Then you need to prioritize debt repayment. So, okay, now I'm owing money. How do I repay this debt? Can I renegotiate on how I'll pay off the loan? Put aside money every month to pay off a certain debt. If you can be deliberate and disciplined, you will realize that you will clear off your debts sooner or later. It's all about being deliberate and all of that. You also need to find ways of increasing your income. So you can look for a side hustle. You can be a DJ. I have a friend, I don't know if he's on this call. He's in America, he works and he DJs. He DJs. He's a big boy, he DJs. I know people that work and bake cake over the weekend. I know people that work and over the weekend, they make clothes for customers and all of that. So you look for other ways to increase income, And you also need to build an emergency fund. Like Maria said, emergency fund is very necessary. The way the world is now, God forbid, you can lose your job. Something can happen. You can pass one way and last one will catch you. I mean, you need to have that emergency fund, At least maybe fund that even if this is your job now, at least the next 6 months you can cover your basic bills, and then from there you can try and get back on your feet again. And you need to seek financial advice, and that is why we are here. Quantum Zenith. I mean, if you like my guy said, anything, trust, commercial papers, mutual funds, equities. If you're not sure what equity to buy, you can always reach out to us. You're not sure what mutual fund to buy, you can always reach out to us, and then we can profile you and tell you which way and what way to go about it. One of the beautiful things of Quantum Zenith is that we have our app, meaning that when you buy into our products, you can always have a look at your investment any day, anywhere in the world. Be in your house at 3 a.m., you can pick up your phone, look at your investment. I mean, you can be in London, you can be in America, you can be in Taiwan, you can look at your investments. So like the key takeaways, I will say it again, is you need to take stock of your finance, and you need to create a budget. And you need to live a moderate life, live a realistic life. There's nothing wrong in if you're down and then you stand up again. My favorite quote from one of my favorite basketballers is fall down 7 times, stand up 8. So you can always go back, take that reset button, cut your cost, cut your coat according to your clothes, and I mean the sky's the limit. And thank you very much.
All right. Thank you. Thank you so much, Nee, for that explanation. Okay, so we have come to the time that I know a lot of people have been waiting for this session, this particular aspect of the discussion, which is questions and answers. So we will take some questions from our audience, right? So if you have questions, please drop them and drop your questions in the chat, and then I'll direct them to our panel, right? So now, last question, and this is to Mr. Kennedy. Can one do the annuity for 15 years? And, Mary talked about an annuity calculation that she did. Can one do an annuity for 15 years? And what products do you have that has this annuity option?
Okay, Chimamaka, thank you. The answer is yes. It will just be disciplined investing, and the way we would do it is that you can take advantage of our direct debit form. So we have a direct debit form where you will just fill it and put an amount that will be debited from your bank account on a monthly basis. So once that money is debited from your bank account, then it goes straight into like our money market fund. So our money market fund is one option that can be used. Any of our mutual funds can be used. So you just fill the direct debit form, put an amount every month, they debit that amount, they take it. The only thing I will mention is that, and I think when Marie was talking about it, Marie mentioned the issue of that rate may not necessarily be fixed. So typically for an annuity, the rate is supposed to be fixed. We don't have a product that exactly will say, okay, this is the fixed rate. Depending on the amount, then we can enter a bilateral contract. It is very possible. If the amount is sizable, then a bilateral contract can be entered between the organization and you, the investor. But what we typically have for the bulk of our investors today is to be investing a fixed amount of their money every month, using the direct debit system. So once you do that, you can do that. I did that. I have that for my kids. I've had that. My first child is 18. He's 18. I've had it for them right from when they were young. And what I was doing was as small as 20,000. And I can say that over the 18 years, there were some periods, of course, when heavy expenses came that I would clear the money in my account before they'll take the debit. But for a good amount of the years, the house was taking the 20K. And when I looked at what they all had, in short, at a point, it is just standard that putting money every month over a long period of time, it's just one of the best investment culture or behavior that one can have. So thank you.
All right. Thank you so much for that response. I know that questions are being answered already on the chat on the go. So if you have any question, please raise your hands, or you can drop your questions in the chat so that we can take your questions. questions? Okay. All right. So the next question is so this is open to all the panelists. So who would like to answer? Are there any products that serve as a hedge against inflation? Are there any products that serve as a hedge against inflation? So who'd like to take this? Mary, would you like to take this, or Kennedy, or Rani? Okay, Mary would like to take it.
So our current inflation rate is 24%. I know it's reduced to 24%. So right now, we don't have any products that would help you hedge against inflation per se. That's our primary product because our money market fund is the rate is floating. The products that would help you hedge against inflation are products that have a fixed rate over a long period of time, right? So it could be plus or minus, right? So just in case inflation dips or inflation increases, you have a fixed rate that could help you maintain your regular income because the monetary policy rates or interest rates usually fluctuate based on inflation rates. But once you get into a long-term fixed product, Kennedy talked about long-term bonds. So if you do a 7-year bond, a 10-year bond that has a fixed rate, so that would help you hedge against any fluctuation in rates. So just look at long-term products, and you to also make sure that you're not at the losing end of whatever long-term products you go into. And then, yes, we also act as an issuing house for bond products. So yeah, the capital arm, Kennedy Stein, right now we have a product in the market. It's a guaranteed infrastructural bond. I think the tenure is about 7 years, Kennedy, right? Is a 7-year bond that you can invest in. So we would also put out that information to everyone who has attended this webinar. Thank you.
All right. Thank you. Thank you so much, Mary. For any other question? Anyone? Yes, I know someone is asking for if we can get materials. We'll try to see if we can send like a record of this webinar. But there are no materials. Any other question? Just raise your hands, or you can still drop them in the chat box.
All right. Can I add?
Oh yes, please.
Yeah, no, I was going to add that I think for the inflation question too, typically the book will say that real estate investments are a very good edge for inflation. That is what textbook says. So definitely by the time we have a lot of pipeline of products that are coming, our real estate investment trust is in the pipeline. But one very good edge, even though he has a high risk, is equities. Equities is not necessarily a 100% match, depending on the tenor. And when we talk about equities, we still continue to emphasize the tenor over time. For example, as Marie mentioned, if you had invested in our inflation is doing somewhere around the low 30s or thereabout. If you had invested in Zenith in the public offer, and you were going to sell about a month ago, you were definitely going to make a return that was higher than 30. As of today, it's about 25, and we know the market has come down over the last 1 week. A GT Bank, you would have made like around, so for today, GT, you are making 30, even though it has come down. In Fidelity, you are making like 83. That is like almost 3 times inflation in terms of return. So for the young people, the young investors that we have, you want to spend a return that is at least competing or staying above inflation, one that is good for you because you have a long-term horizon in terms of you have a long time that you can be investing money, is clearly equities. A long time and consistent investment in equities definitely will help you earn something that is a little above inflation. Thank you.
All right.
Yeah,
All
and
right.
to
Thank you.
add to what Kennedy has said about equities, you can always sell your stocks, and then you have guarantee. If you buy stocks that the companies pay dividends, you have the guaranteed returns as well.
Okay. Thank you so much. Thank you so much for the insight and then the explanation. Please, I know I can see questions here that has to do with the shares, the last Zenith Bank shares and other questions about stocks. I will be dropping an email address for if you have further questions or if you have issues to be resolved for your shares, please send a mail to inquiries at quantumzenithsecurities.com.ng if you have questions about the stocks, right, and the shares aspect, and copy suleiman.alpha@quantumzenith.com.ng. Now, for anything that has to do with the money market, I can see a question here. What's the minimum investment amount for the money market, right? It is 10,000 naira. It is 5,000 naira only. The minimum amount to invest for the money market is 5,000 naira only. And for questions relating to the money market, the mutual funds, please send us an email at service@quantumzenithassets.com.ng, right? When we get your emails, we would respond to you. So it is 5 already, and we want to round up this webinar. So I believe we've said a lot of things today. We have covered so many important insights today, from the foundational principles of financial literacy to practical strategies for saving, investing, and making informed money decisions. One thing is clear from all we've heard today is that financial security is a journey that requires knowledge, discipline, and the right mindset. So as we celebrate the Global Money Week, I encourage everyone to take at least one action towards improving the financial well-being, whether it's setting up the budget, reading, gaining knowledge, start an investment plan. Mr. Kennedy gave an example that small steps lead to big changes. So don't wait until you have that big money, or you want to hit one money like that. That's what people will tell you. Well, I'm just waiting to hit one big amount of money and then I'll start saving. No, start small, and then you'll be surprised at what your small investments will do for you in the future. So to come on board, please download our mobile app on Play Store or an Apple Store, right? We have a lot of products, and then send us emails to the emails that we have sent you to find out more if you need further clarifications, and we'll be here to assist you. So a huge thank you to our panelists for sharing your wisdom, and to our audience for engaging with us today. So please, if you want to learn more, please, like I said, about our financial literacy programs and investment solutions, send us mails, and then you can also send a message on our Instagram page and LinkedIn profile, Quantum Zenith. Let's keep this conversation going. Thank you so much, everyone. And remember that building wealth isn't about how much you earn. It's about how well you manage and grow what you have. Thank you all for joining, and have a fantastic day. Also, I'd like to say this. I'd like to drop this. I'm seeing a lot of feedback, right? Please, from people, just send us an email, and then we would respond to you. We would respond to you. Thank you so much. Bye. Have a wonderful day.
Thank you very much. Bye-bye.